Bitcoin is a digital form of money that exists only on the internet. It is not printed like paper money, and it is not controlled by any government or central bank. Bitcoin was introduced in 2009 by an unknown person or group using the name Satoshi Nakamoto. The goal behind Bitcoin was to create a new type of money that could be sent directly from one person to another without using banks or financial institutions. This made Bitcoin the first successful decentralized digital currency in the world. To understand Bitcoin in simple words, think of it as online cash. Just like you use cash to pay someone in person, Bitcoin allows you to send money to anyone in the world using your computer or smartphone. You do not need permission from a bank, and you do not have to worry about office hours. Bitcoin works 24 hours a day, 7 days a week, and can be used from almost anywhere. Bitcoin runs on a technology called blockchain. A blockchain is like a public digital record book that keeps track of every Bitcoin transaction ever made. When someone sends Bitcoin, the transaction is grouped with others and added to a block. That block is then linked to previous blocks, forming a chain. Once information is written on the blockchain, it cannot be changed easily. This makes Bitcoin very secure and transparent. The Bitcoin network is maintained by thousands of computers around the world, known as nodes and miners. Miners use powerful computers to solve complex mathematical problems. When they solve these problems, they get the right to add new transactions to the blockchain. In return for their work, miners are rewarded with new Bitcoins. This process is called mining, and it is how new Bitcoins are created. One special thing about Bitcoin is that its supply is limited. Only 21 million Bitcoins will ever exist. Unlike traditional money, which governments can print more of whenever they want, Bitcoin cannot be created endlessly. This limited supply makes Bitcoin scarce, and many people compare it to gold. Because of this, Bitcoin is often called digital gold and is seen as a store of value. Bitcoin is decentralized, which means no single authority controls it. There is no company, bank, or government in charge of Bitcoin. Instead, the network is controlled by its users around the world. This gives people more freedom over their money and reduces the risk of manipulation by powerful institutions. Anyone with an internet connection can join the Bitcoin network and use it. To use Bitcoin, you need a Bitcoin wallet. A wallet is a digital tool that allows you to store, send, and receive Bitcoins. It can be an app on your phone, software on your computer, or even a physical device called a hardware wallet. Each wallet has a public address, which is like your account number, and a private key, which is like your password. The private key proves that the Bitcoin belongs to you, so it must be kept safe. Sending Bitcoin is simple. You enter the receiver's wallet address, choose the amount, and confirm the transaction. Within minutes, the transaction is broadcast to the network, verified by miners, and added to the blockchain. Once confirmed, the Bitcoin moves from your wallet to the receiver's wallet. This can happen across countries without the delays of traditional banks. People use Bitcoin for many reasons. Some use it as a method of payment because it allows fast international transfers with lower fees compared to banks. Others use it as an investment, hoping its price will increase over time. Some people also use Bitcoin to protect their wealth in countries where local currencies lose value quickly due to inflation. Over the years, Bitcoin has gained popularity and acceptance. Many companies and online stores now accept Bitcoin as payment. Some big institutions and investors have also started adding Bitcoin to their portfolios. This growing adoption has helped Bitcoin become one of the most well-known cryptocurrencies in the world. One of the biggest attractions of Bitcoin is that it gives people control over their own money. With traditional banks, your funds can be frozen, limited, or delayed. With Bitcoin, as long as you control your private keys, you control your money. This financial freedom is one of the main reasons why people believe Bitcoin is revolutionary. However, Bitcoin is not without risks. One major risk is price volatility. The price of Bitcoin can rise or fall very quickly in a short period of time. This makes it exciting for traders, but risky for beginners. Someone can make big profits, but they can also face big losses. That is why experts always say to invest only what you can afford to lose. Another risk is security. While the Bitcoin network itself is very secure, users can still lose their Bitcoins if they are careless. If you lose your private key or get hacked, there is no customer service to help you recover your funds. Bitcoin transactions are irreversible, so once money is sent, it cannot be taken back. This means users must be very careful. There are also scams in the crypto world. Fake websites, fake apps, and fraud schemes try to trick people into giving away their private keys or sending Bitcoins. Beginners should always use trusted exchanges and wallets and avoid offers that sound too good to be true. Many people ask if Bitcoin is legal. The answer depends on the country. In most countries, Bitcoin is legal to buy, sell, and hold, but there may be taxes and regulations. Some countries are more strict, while others are very friendly to cryptocurrencies. Before using Bitcoin, it is important to learn about the rules in your country. Another common question is whether Bitcoin is anonymous. Bitcoin is not completely anonymous, but rather pseudonymous. This means your name is not directly attached to your wallet address, but all transactions are visible on the blockchain. If someone connects your identity to your address, they can see your transaction history. So privacy is better than banks in some ways, but it is not perfect. You might also wonder if Bitcoin is expensive. While one full Bitcoin may cost a lot, you do not need to buy a whole one. Bitcoin can be divided into very small units. The smallest unit is called a Satoshi. This means you can buy just a small fraction of Bitcoin, even with a few dollars. This makes Bitcoin accessible to almost everyone. If you want to buy Bitcoin, you usually use a cryptocurrency exchange. An exchange is a platform where you can buy and sell Bitcoin using your local currency. After buying, many people move their Bitcoin to a personal wallet for better security. This helps protect their funds from exchange hacks. Bitcoin is often compared with traditional money. Traditional currencies are controlled by central banks and can lose value due to inflation when more money is printed. Bitcoin's limited supply makes it resistant to inflation. That is why some people see Bitcoin as a hedge against inflation and economic uncertainty. Bitcoin is also different from digital money in your bank account. When you use online banking, your money is still controlled by the bank. With Bitcoin, you truly own your money as long as you control your private keys. This idea of self-custody is very powerful and is changing how people think about finance. Over time, Bitcoin has inspired the creation of thousands of other cryptocurrencies, often called altcoins. However, Bitcoin remains the first and most trusted cryptocurrency. Many people see it as the foundation of the crypto market and the safest long-term option among digital assets. Bitcoin's future is a topic of debate. Some believe Bitcoin will become a global currency used by millions for everyday payments. Others believe it will mainly be used as digital gold and a store of value. Some critics think Bitcoin is just a bubble. The truth is, no one knows for sure, but Bitcoin has already survived many challenges and continues to grow. For beginners, the most important thing is education. Before investing in Bitcoin, take time to learn how it works, how to store it safely, and how to avoid scams. Start with a small amount, gain experience, and never invest money you cannot afford to lose. Patience and discipline are key in the crypto world. Bitcoin is not a get-rich-quick scheme. While some people have made huge profits, many have also lost money due to poor decisions. Long-term thinking, proper research, and emotional control are very important when dealing with Bitcoin and cryptocurrencies. In simple words, Bitcoin is a new form of money built for the internet age. It allows people to send value directly to each other without banks. Using secure blockchain technology, it is limited in supply, decentralized in nature, and gives users more control over their finances. At the same time, it comes with risks like volatility and security challenges. As the world becomes more digital, Bitcoin is playing an important role in shaping the future of money. Whether you see it as an investment, a payment method, or a financial revolution, understanding Bitcoin is becoming more and more important in today's world. If you found this explanation helpful, don't forget to like this video, share it with your friends, and subscribe to our finance channel for more simple and easy guides on money, investing, and financial freedom. Thank you for watching, and see you in the next video.